Okay, so this is the last part of the video and for this topic, and what I want to talk about is how to use your cash journals, cash receipts and cash payments journal to construct the cash flow statement. When you're using your cash journals to prepare the cash flow statement, it is important to note that not all information recorded actually relates to an actual cash flow. Okay, so let's have a look at an example taken from your textbook. Williams Windscreen has provided the following cash receipts journal for December 2015. In the cash receipts journal, you should be familiar with all the different columns, what they stand for. So in the bank column, 70,700 is the total cash received for the period. Have a look at these columns. Which one do you think doesn't relate to an actual cash flow? Okay, cost of sales column, 10,250. This column, does not record a cash flow. It is rather a stock flow. Okay, it represents the cost price of stock sold. So this figure should never appear in your cash flow statement. In the debtors control column, if debtors are given a discount expense, are given a discount for early payments, then the actual cash received is going to be less than the total debtors amount. So debtors control records the total amount by which debtors will decrease. This figure is likely to be comprised of some cash and also plus discount expense. And because the cash flow statement only reports cash, which is receipts, cash receipts from debtors, this item here, so only this amount should be reported in the cash flow statement. So how do we calculate what's the receipts from debtors? We use debtors control, minus total debtors control figure minus discount expense. In this case, it's 21,500 minus 600. 20,900 is the cash inflow from debtors, or what we call receipts from debtors. And only this amount should appear in your cash flow statement. Okay, so from the cash receipts journal, just to sum up, amounts should be reported in the cash flow statement are receipts from debtors, and that's how you calculated the receipts from debtors. Subtract the discount expense away from debtors control. Okay, do not include cost of sales, because that's a stock flow, not a cash flow. Include your cash sales figure, include figures from your sundries. Cash inflows represents various cash inflows, records your GST figures. GST received. Now for the cash payments journal, note that again not all the columns total refer to cash flows. Here in the bank column, the 94,250 is total cash paid for the period, total cash outflow. Creditors control column includes both the cash payments to creditors and the discount revenue. Alright, but only the cash paid should be reported in the cash flow statement. So how do we calculate what's the cash paid? What's the payment to creditors? You use the creditors control figure, in this case 26,000 minus the discount revenue, 300 is the actual cash payment from the business to the creditors, 25,700. So in the cash flow statement, you only need to record this cash flow payments to creditors. Again, that's discount revenue, subtract from and taken away from creditors control. And you need to include the stock control, the cash payment for stock. In the stock control column, include your cash paid for wages, any sundries, report them separately. Advertising office supplies, GST clearing. Now GST clearing in the sundries, it would represent a GST settlement rather than GST paid on goods and services. Vehicles, drawings, loan, that's a loan repayment. Okay, and GST, this figure in the GST column represents GST paid on goods and services. Okay, GST paid and received. Now, all cash transactions relating to GST must be reported as operating cash flows. This is very, very important. You need to remember this. Okay, all cash flows relating to GST are classified as operating cash flows. But there are important differences in reporting GST paid and received on everyday purchases and sales, and GST paid to or received from the ATO. Okay, so what it means is in the cash receipts journal, the GST column reports the GST received from cash sales, whereas GST refund from the ATO, the refund, because it's infrequent, it would be recorded in the sundries column. Both are operating cash flows. However, because they come from different sources, okay, one is from the customers and the other from ATO, therefore, in the cash flow statement, they should be reported separately, okay? So under the heading of GST received, if it is GST received from cash sales, or under the heading of GST refund, if it is a refund from the ATO, because the sources are different. GST received is received from customers, GST refund is received from the ATO. Similarly, in the cash payments journal, the GST column records GST paid to suppliers. This can be reported as GST paid. However, GST payments recorded in the sundries column must be reported separately as GST settlement. Again, in the cash flow statement, just make sure that you report these under separate headings. Okay, GST paid is what is paid to suppliers. GST settlement is what is paid to the ATO. Alright, just have a look at the table here. To sum up, there are 4 potential cash flows related to GST. These 4 cash flows are all reported under the operating heading. Okay, operating inflows can be either GST received or GST refund. Operating outflows can be either GST paid or GST settlement. Okay, finally, so given what we've talked about, how to use the information from the cash receipts and the cash payments journal, this is the final cash flow statement that you can construct for the month of December 2015. Okay, in the different categories, cash flows from operating activities, cash inflows, now cash sales, receipts from debtors, GST received, these are all taken from the cash receipts journal. Less cash outflows, these are all taken from the cash payments journal. Go back and check that you can actually find every item in the cash receipts and cash payments journal. Investing activities, cash outflows, no cash inflows for the month. So the only cash outflows, this figure should also come from the cash payments journal. Okay, cash flow from financing activities, cash inflow, capital contribution should come from cash receipts journal. Less cash outflows, loans, loan repayments and drawings, these two, you should find these in cash payments journal. Okay, and then you add up all the net cash flows from operations, from investing activities and financing activities, you get the net increase or decrease in cash position. Okay, in this case, it's a cash decrease, and add the bank balance at the start of the month to get the bank balance at the end of the month. So expected to see a question similar to this. Okay, you should be able to read off cash receipts journal and cash payments journal and construct a cash flow statement from there on. Okay, homework for this topic. Okay, please complete the end of chapter questions. I know there's a fair bit of end of chapter questions, but these are very important practice to consolidate what you have learnt from watching the videos. So 12.4, 12.5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Okay, the page references are here, and you need to complete all the review questions in chapter 12. and thanks for watching.